Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done. When you're in need and don't know where to go, pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and I am so sorry, guys. This is round 3, so hopefully third time is a charm to get our sound and our video working. But welcome to Mortgage Mom Radio. Today we are talking about zombie mortgages. I know that Halloween is around the corner. My mother-in-law sent me an article a couple days ago that was all about a couple that was dealing with a zombie mortgage coming back to haunt them. So I figured with the Halloween around the corner, zombies and zombie mortgage, what better topic for us to discuss today? What is it? Do you need to worry about it? Are you a homeowner? Have you had a second mortgage that at some point in time you thought was discharged or you thought that it was charged off? Well, that is definitely a great topic for us to be discussing right here, so close to spooky Halloween. Anyway, so everybody stay tuned. We're going to run one commercial since we know that everything is working. I'm going to take a breath, and when we get back, we're going to jump right into it. So stay tuned. Once a month, I bring you guys something different. I pick a topic, and that's what we talk about. So follow along, like my page. Make sure you guys are following me right here on Instagram and Facebook. So this week, we're talking about cash. Start over. Oh, nice, Manny. Manny, did you run the wrong commercial? Lovely. You guys, we are just killing it. We're knocking out of the park today. So that was obviously, you guys could see I started a commercial that didn't work. And you guys get to see how I get to do that over and over again until I get it right. Anyway, I can see Michael Enriquez jumps on. Thank you, Michael, so much for joining me. You guys are loving today. This is so great. I have somebody else jumps on, says, I love these bloopers. That's awesome. Thank you so much. Anybody that is listening to at Go Country on Saturday morning, you don't get to see the bloopers unless you actually join us live right here on YouTube on Wednesdays. So make sure that you guys tune in. How do you know that I went live? Well, you get a text message. So text the word mom to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Now, that is the same number to call our office if you'd like to speak with us in person to get information about mortgages, real estate, lending. We are here to help you and to get you and your process started. So today we are talking about zombie mortgages, and Heidi did jump in and says it's the zombies, and it is. I swear we're having such a rough day today, but that's okay. We're just going to keep on going. So there was a news article, like I said, that came out that was about a couple that had a zombie mortgage, and that's exactly what they called it, come back to haunt them. Basically, there is a second lien that they had on their home at one point in time, and they thought that it got charged off. They were even told by one of the companies that had the debt that it was charged off and that they no longer owed it. And then it came back to haunt them. So I pulled up what the actual definition is. Believe it or not, zombie mortgage is a real thing. They've got a definition for it. So I pulled up what that definition is from the CFPB website. So the Consumer Finance Protection Bureau, they are the ones that govern all of our lending laws and rules and make sure that we're doing everything the right way. And so I pulled it up from their website. I'm going to read to you guys what the actual definition is of zombie mortgage. Then we're going to talk about who could possibly have that problem, who needs to be aware and making sure that they're doing due diligence to to protect themselves. So what is a zombie mortgage? So zombie mortgages are mortgage debts that consumers thought were forgiven or satisfied long ago, but that still exist. The debts may have been written off by the lender and sold for pennies on the dollar to debt collectors. Alternatively, the mortgage company may have simply gone silent and stopped sending statements or communicating with the borrower altogether. Years later, a debt collector reaches out to collect on the debt. Because these mortgages are reappearing after being considered dead or gone for so long, they're sometimes called zombie second mortgages. Before the Great Recession in 2008, mortgage lenders sometimes sold borrowers two mortgages for the same property instead of one. For example, a primary mortgage might cover 80% of the loan, and a second mortgage covered the remaining 20%. As the Great Recession hit and the economy shrank, people had trouble making mortgage payments. Many borrowers got loan modifications or declared bankruptcy. Some lenders ceased to exist and sold off their loans, while others wrote off the second mortgages, not expecting to be paid because of falling home prices. Some borrowers no longer received mortgage statements on their second mortgages. In fact, many heard nothing about their second mortgage for more than 10 years. Now, years later, debt collectors are pursuing borrowers on these smaller second mortgages as property values rise. Debt collectors who bought these are looking to collect. So I think that they did such a great job in explaining what that was, but let's go back a little bit in history like they did in that definition. So many borrowers got mortgages, especially through the years of 2001 and 2007, that were an 80% first mortgage and a 20% second mortgage to get into the home with 100% financing. And my mother-in-law, Karen, jumped on and she said, wow, thank you. And you're very welcome. Thank you for giving us the topic of the day. So many people got into their home for 100% financing. They owed 100% on the home that they purchased. Well, then all of the sudden in 08 and in 09 and 2010, property values swiftly declined. They dropped in value. Your home was no longer worth what it was, especially if you were somebody that bought that home from 05 to 07. You were definitely in debt. You owed more on that house than what it was worth, or even if you put a significant down payment down, you barely had enough equity in the home to cover the mortgage. So you lost all that money that you put in. So many people fell victim to the cycle, to the history, and to the dropped, values in homes. And because of that, many were having a difficult time making payments. Well, you say, why? Well, because a lot of those mortgages back then were adjustable rate mortgages. They were interest-only mortgages. So after a 5-year period, if you bought it in 2005, in 2010, your rate started to adjust. If you bought it in 2001, in 2007 or 8, your rate started to adjust. Interest rates went up pretty significantly in 07 and in 08. They did start to come down a bit in 09. We didn't really start to see reap the rewards of lower interest rates really until about 2010. 2011 is where we saw some really good interest rates come to play. But during those years, those interest rates went up. Those adjustable rate mortgages went up. It was difficult to be able to make payments for many borrowers, especially on 2 loans rather than 1. And so many just stopped making payments on those second mortgages. Many, and let me just tell you that because we run across this all of the time with applications, but many borrowers did loan modifications during those years. They couldn't refinance. They owed more on the house than what it was worth. They couldn't do a refinance, so they were reaching out to their mortgage companies to do a loan modification. In their mind, the same loan officer, the same mortgage company did their purchase, gave them 100% financing. They, in their mind, thought everything was one, okay? Even though they took 2 separate mortgages, in their mind, it felt like one mortgage. That's really what they believed that they had. So they're doing a loan modification. They're calling the bank back that had originally helped them, who was servicing their loan, the 800 number on the statement. They're getting a loan modification done, but what they don't realize is that that the loan modification was for the first mortgage. It was not the second mortgage. Mortgages first and second are completely separate. It's two separate sets of loan documents. It's two separate liens. It's two separate everything. So they didn't realize when they were doing the loan modification, and they thought that they were getting everything put together and corrected and taken care of, and they were making good on their debt. They didn't realize that this second mortgage was still hanging out there. It was still owed. It was still liened. It was still due. So this is many clients. Other clients knew that it was there, stopped making payments on it, didn't get a lot of hassle, didn't get any foreclosure notices or pre-foreclosure notices, received a bunch of, I'm sure, bills in the mail saying that it was due, saying that it was past due, getting something else that says charged off, and thinking that it's just gone. Well, those lenders in that second position, you guys wonder why we talk about home equity lines of credit. You wonder why home equity lines of credit and home equity loans in second mortgage position. So you have first mortgage, which takes the cake. They're number one on lien. They get paid off first. Now, second mortgage is lien number two. They get paid off if there's money left over after lien number one gets paid. So why are home equity lines and home equity loans at higher interest rates? Well, because they come in second. They come in second place. They don't get paid off unless there's enough money to pay them off. So during those years where property values dropped and people were upside down in their homes and they were foreclosing or they were loan modifying or whatever it was that was taking place, a lot of those second mortgages didn't get paid. They stayed on the books, and those second mortgage companies did not come back to try to get their money, because if they started foreclosure proceedings, first mortgage gets paid off first, there's nothing left for them. So there's all these second mortgages that have been sitting there just kind of festering for all these years, festering and festering. And what are they doing? They're building interest, and they're building fees, and they're building all kinds of things on that debt that you owed. And you don't even realize it. But now that there's so much equity out there, all of a sudden, these companies are coming back to try to collect their debt. Now, it might not be the original company that you had signed up with originally that's trying to come back at you. Remember that when any debt goes bad, just like a medical collection or a credit card collection or a personal loan goes to collection, whatever that debt is, when it goes to collection, they can sell that debt, and they can sell it over and over and over again to different debt collection companies. So a lot of these have been sitting there, and now all of a sudden people have equity, and we're starting to see many of these companies, these debt collection companies, coming out of the woodworks. So if you had a second mortgage and you don't know if it got paid off, if it's been charged off, if it still exists, is it a lien on your title report? You don't know if it's something that you need to worry about. Well, you guys can always call us. We'd be happy to do the research for you, tell you what we see, on your property profile. We can pull up a title search, and we can let you know if there's anything that's there. And then that way you can get proactive in trying to make sure that you're taking care of that debt. Now, there were some other things that I read about it that were very important about making payments, statutes of limitations, things of that nature. So I do want to touch base on those. I want to make sure that you guys all know exactly what you should be doing, and you don't make any wrong movements either. Heather did jump on. She says, hi, everyone. So Heather, thank you so much for joining. And I do want to remind everybody that this is interactive. So if you have questions, please put them into the feed, ask them. Happy to read it out loud and answer those questions for you. I also want you to know that you do not have to ask me questions about the topic of the day. If there is a question that you just have in general that you want to know about mortgage or real estate, or anything mom related, happy to answer those questions too. So please feel free to put that into the feed. And if you are listening to the show at a later date, you want to be able to join us and see us do this live, please text the word MOM to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Now, this is when I would usually take a commercial break, but since I don't know what's there, I don't think I want to run another blooper for you guys. So we're just going to keep on going and we're going to keep working through the show. I do see that Michael Manriquez gets on, says hello again. And thank you so much, guys. We've got about 10 people watching right now, which I love because we did restart the show 3 times. So for all of you guys that hung in there with me and are here right now, thank you so much. I do really appreciate it. And I do want to remind everybody that we are here to help you in any way that we can. We are here to give you the education that you need, whether you are a current homeowner or you are somebody that is looking to purchase a home. You've never done it before. You've done it 5 times, but you are looking for help. That is what we are here for. That is what we do. So we want you to call the office. It's the same phone number that you text mom. That's how you get a hold of us. You can go to our website, go to mortgagemomradio.com. Don't forget the radio. If you forget the radio, you are not getting to the website. So mortgagemomradio.com, and you can put in an email to me. It's going to come directly to me. I'm going to respond to you. We are here to help, and that's what we want to do for you. So again, thank you to everybody that is still here and hanging tight with me. So back to zombie mortgages. All right. So some statutes of limitation. They do vary by state. So I do want to say that. I want to make sure that depending on where you live, that you are looking up what the statute of limitation is for your state. So definitely make sure that you look it up. I looked up very, very quickly statute of limitation for Arizona just right before we started, and it was 6 years. So one of the things that is happening is that these debts are well over 6 years old, but they are still coming back, right? And they shouldn't be. They shouldn't be coming back if it was charged off debt and it is over 6 years old. What makes it very difficult is that it's still a lien, and it is a lien that is filed against the property, and the lien stays there until it has been removed. And so in order for it to be removed, the lender has to remove it. So you want to make sure that you are doing everything the right way. If you happen to find out that you've got a second lien that is tied to your property that is older than the statute of limitations for your state, then the first thing that you should do is you should reach out to the CFPB, to the Consumer Finance Protection Bureau. They do have on their website a place where you can put in a claim, and they actually have a little flag when you're putting in the claim that you can flag it when it has to do with foreclosure or pre-foreclosure, so that they can prioritize your request to make sure that you do get covered. So that was one thing that I did read that I thought was very helpful information that I wanted to make sure that everybody knows. And Michael's so sweet. He actually says worth waiting. So Michael, thank you so much. Really do appreciate it. But that is really good information for you to know. Now, the other thing to keep in mind, too, is that a lot of people had bankruptcies back then during the Great Recession, right? We all went through hell and back during those years. Many people had bankruptcies, and they thought that their second mortgage was removed in the bankruptcy. If your bankruptcy attorney did not get the lien released, and there's certain forms that have to be filed with the court in order to do that, then that lien could also still be sitting there. Now, that loan never comes out of the bankruptcy. Once it goes into a bankruptcy, it could be 5 years, it could be 10 years. That loan is still part of that bankruptcy, which means that they cannot collect on it. So you may have not heard anything for all these years. You could have done a bankruptcy 10 years, 15 years ago. You might think that this second lien is gone. You don't owe on that equity line of credit anymore. And come to find out, you're trying to get refinanced, or you're trying to sell the home, and all of a sudden that lien is still there. And in order for you to close, to get clear title, to pass on the home to the next borrower, or to be able to do a refinance and get a new title insurance policy, that you have to pay off that lien. So if you had a bankruptcy during those years, you've never checked on it, you had no reason to do a refinance over 2020 and 2021, definitely reach out. Let's pull it up. Let's see what kind of liens are there. Let's see if that still exists. If it does still exist, and it could be too late, I'm not a bankruptcy attorney. I do not know what the limitations on timelines are, but you may want to reach back out to that bankruptcy attorney and ask them if there's anything that they can do to get that lien removed. And we have run into this quite a few times where people thought it was gone and it actually wasn't gone. And remember what happens with these liens, right? That lien in the case of a bankruptcy isn't going to get sold and sold and sold and sold. It's just going to probably sit there for a very long time until you go to sell the home and all of a sudden you've got to pay something off you didn't know existed. But for the debts that just went bad, you just stopped making payment on it and it's just sitting there. They're going to resell it over and over and over again to different collection agencies that are going to buy the bad debt in hoping to collect something. Now, another thing that I did read that I thought was really important to pass along to everybody is that if you're going to look up your statute of limitations for your state. If you are within past the guidelines of your state of limitations, the last thing that you want to do is make a payment of any kind towards that debt. The minute that you make a payment, it starts your statute of limitations over again. So once again, if you find that that is still there, that you've got a lien against the property, if somebody comes to collect on debt that you didn't realize was still existing, the first thing that you want to do is to reach out to somebody. Reach out to the CFPB, the Consumer Finance Protection Bureau, reach out to a real estate attorney, reach out to somebody to help you. Do not go into some sort of new monthly payment immediately. Now, it could be something that you might end up having to do. So I'm not exactly telling you don't make payments. I'm not telling you anything at all other than protect yourself, make some phone calls, talk to some people before you get yourself into a new payment arrangement or you make any payment whatsoever towards that debt, because you will be starting yourself all over again. If you're past that statute of limitations, I don't personally know exactly the steps that you take to try to fight it. But I do know that it is very hard, that these are popping up. People are getting to a point where they're even though they're past statute of limitations, pre-foreclosure is getting started. The home could get sold from underneath of them. They didn't even know that the debt was still there. They're feeling caught in a corner, like they're going to have to list the home and sell it so that they don't end up with a foreclosure on their record and they don't lose the additional equity that they still have remaining in their home. So protect yourselves. If you don't know if something exists, if this story sounds familiar to you, you had a second mortgage, you thought it went away, you had filed bankruptcy, so that's how you thought it went away. Whatever the situation might be, definitely reach out. Let us help you. Let us help you do some research. We can pull up what we can see from a title search, give you that information. And ultimately, if you need to get that lien paid off, then we can help you from there. We could help you by doing a new refinance. You might be able to renegotiate with that, collection company to start making payments. But we definitely are here to try to help you and make sure that you're making the right steps forward. So once again, how do you call us? It's 844-935-3634. That's 844 We Lend For You. WELEND and the number 4. If you want to be part of the show, you want to be able to get interactive, you're not listening to me today, which I can see you guys, I've got some of my followers on, which is fabulous. But if you're listening on Saturday morning on Go Country 105, you need to do this with me live. You get to see the bloopers where I run the wrong commercial during the show, or we have no sound and we got to start all over again. So text the word MOM to 844-935-3634. That's 844 We Lend For You. WELEND and the number 4. Same phone number to reach us in every direction. If you want to go to our website, you can book yourself an appointment right on the website. So go to mortgagemomradio.com. Do not forget the radio, but you can book an appointment to talk with us for a time and date that works for you. If you don't see a day and time that is open and available, you need later in the evenings, you need earlier in the morning, whatever that might be, we are here to work with you and to help you. There is a contact us form right there on the website as well. It sends me an email. Just send me an email and let me know, hey, I'd really like to talk to somebody, but I work nights, I work days. I need this time. Is there any way that you've got somebody that can help me? I have Carrie that's in Tennessee. I've got Heidi in Arizona. We've got Heather that's in California. We can cover your time zone wherever you might be. So please don't hesitate to reach out and let me know if there is a better time and day that works for you. We're happy to speak with you on the weekends. We are here to help you, but go to the website, send me a message, book yourself an appointment, and get yourself on the books to talk with us. Call in. We'll get to you right away if you do call the office, but we are here to help, and that's what we want. Now, one more thing that I do want to make sure that I end the show with, because it's been quite some time since I talked about it, so I want to bring it up again because it is a fantastic tool, is the Mortgage Mom Radio phone app. So I do have a tools app, and then we also have an app that is in the Apple Store and Google Play. So I'm not talking about the App Store. I'm not talking about Google Play. I would love for you guys to download those apps. That is how you actually start your loan application, and that is how you will do all of your paperwork with us. But if you are not quite ready to do an application yet, and you're just looking for some fabulous tools that you can use to determine if you're ready to buy a home, if refinancing is a good idea, you want to watch the YouTube weekly live, you want to send me an email, you want to call the office, it's all there in our tools app. How do you get the Mortgage Mom Radio tools app, which is different than what is in the App Store and what is in Google Play, is you text the words, 2 words, phone app. That's it. Just phone app, PHONE and APP. So phone space app. And I'm just going to be really clear on that, because if you put anything in there other than that, you will not get the automated reply. So I want to make sure that you do get it. But the exact same phone number that you call, same phone number that you text to know that we went live, that's opting you in to get a once a week email, or once a week text message letting you know that the show is starting. If you want that tools app, which will run payments for you, it will run VA payments. Are you a vet and you want to know what your monthly payment would be? It will run FHA payments for you. Are you wondering what that extra mortgage insurance is going to cost you monthly? It will run conventional payments for you. It will give you how much will you qualify for. So it'll give you an idea of, you input. It has an affordability calculator. So you input how much debt you have. You input how much your monthly income is. And then it's going to calculate for you an about what you qualify for number, but it gets you started if you're kind of a little scared or not quite ready to pick up the phone and talk to us. It will give you refinance monthly payments. It will give you purchase monthly payments. It, like I said, it calculates the mortgage insurance, the property taxes, the homeowner's insurance. And if you don't know what to put in the calculator for those numbers to run, again, super simple. If you've got the phone app, it says email Debbie. It's that simple. Email Debbie, and it will send me an email, and you could ask me, hey, I'm trying to do this calculator, but I don't know what percentage to put in for the property taxes. I don't know what number to put in here for homeowners insurance. That is up to me. I will go ahead and give you those numbers, those average numbers to put in there. Again, this is a tools app for you to be able to kind of figure out if you're at that place where you're ready to get things started. You can apply through that tools app, but you will ultimately then get sent over to the App Store on whatever kind of phone it is that you use. So once again, the tools app, you're going to text the 2 words, phone app, APP, to 844-935-3634. That's 844, we lend for you. WELEND and the number 4. It's a great app. You guys should really get it. If you're a real estate agent, if you're a lender and you don't have a great calculator, this one is fabulous. So take advantage of it. I don't care who uses it. It doesn't cost you any money to get it. And it really is a fabulous resource for you when trying to figure out things that you can or can't do. So I'm going to end the show there. Thank you so much for bearing with me, guys. Thank you so much for staying tuned, even with all of the bloopers. I hope you guys all have a fabulous rest of your week. That wraps up our zombie conversation for the month of October. And I'll be back next week right here Wednesday, 1 o'clock on YouTube. Talk to y'all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.